Ladies and gentlemen, good day and welcome to the Q2 FY22 earnings conference call of Godrej Consumer Products Limited, hosted by Kotak Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jaykumar Doshi from Kotak Securities. Thank you, and over to you, Mr. Doshi.
Thank you. Good evening, everyone. On behalf of Kotak Institutional Equities, I welcome you all to Godrej Consumer Products 2Q FY22 earnings call. I'll now hand over the call to Pratik Dandara, AVP, M&A and Investor Relations for initial introductions. Over to you, Pratik.
Thanks, Jay. Hi, everyone. Good evening. We hope you're staying safe and healthy. We have on the call Ms. Godrej, Executive Chairperson, Sudhir Sitapati, Managing Director and Chief Executive Officer, and Sameer Shah, CFO and Head Investor Relations. We'll start with Lisa sharing her perspective on the business performance.
Thank you, Pratik. Good evening, everyone. I hope you and your families are safe and healthy. Thank you so much for joining us on this call today. I'm delighted that Sudhir is here with me today. I have found his initial thoughts on strategy and operations excellent, and we look forward to having him share them more broadly with you next quarter. I will start with our performance. In quarter 2, our overall sales grew by 9% with a 2-year CAGR of 10%. EBITDA de-grew by 1% with a 2-year CAGR of 9%, and PAT grew by 5%, excluding exceptional items. Home care delivered a growth of 5%, led by steady performance in household insecticides and a gradual recovery in air fresheners. Our portfolio in home hygiene is scaling up well. Personal care continued its strong growth momentum, growing at 10%, led by personal wash and hygiene and a robust growth in our hair care portfolio in Africa, the USA and Middle East. From a geography perspective, India grew at 10% with a 2-year CAGR of 10%, led by broad-based growth within the home care and personal care categories. In home care, household insecticides delivered single-digit sales growth. Air fresheners and fabric care witnessed double-digit growth. In personal care, personal wash and hygiene continued its double-digit sales growth momentum with a 2-year CAGR also in double digits. Hair colors also witnessed growth in double digits. Our innovation rate was in the early 20s. We continue to strengthen our e-commerce business, which contributes approximately 4% of our branded sales. Overall, we remain cautiously optimistic on demand recovery in the near term. Indonesia delivered a weak performance with a constant currency sales decline of 2%. This is impacted by challenging macroeconomic variables, a gradual recovery in the air freshener category, and high competitive intensity in the wet wipes category. We continue to put building blocks in place to ensure gradual recovery during the course of the year and drive sustainable, profitable sales growth in the medium term. Our Africa, USA and Middle East business continued its strong growth momentum and delivered a profitable double-digit sales growth of 16% in constant currency terms. Our 2-year CAGR was also in double digits. I'm pleased with the strategic focus and growth mindset of the team as we continue our focus on driving sustainable, profitable sales growth. Our consolidated EBITDA margins at 21.6% decreased by 210 basis points year over year, driven by a decline in India and Latin America and SAARC margins. Our overall margins expanded sequentially by 30 basis points. In India, margins decreased by 330 basis points year on year on a high base and driven by the lag between an increase in input costs and end consumer price increases. This was partly mitigated through scale leverage and continuous cost-saving initiatives. We continue to have a healthy balance sheet. Our return ratios continue to improve sequentially, while the net debt to equity ratio continues to come down. We remain confident of leveraging growth opportunities to drive sustainable growth across our portfolio in fiscal year 2022. I'm very proud of the exceptional agility and resilience demonstrated by our teams. We also continue to adopt a safety-first principle across our ecosystem, supporting our team members, their families, and business partners across to get fully vaccinated. In India and Indonesia, 90% of our people are fully vaccinated. In LATAM, we have achieved a 75% vaccination rate. Unfortunately, our vaccination numbers in Africa are much lower due to the paucity of vaccines, with 50% of white collar and 35% of blue collar fully vaccinated. As always, our values matter the most at this time. We remain committed to doing our best to truly live the Godrej way and serving our people and communities. Thank you.
Thank you. Should we open the call for Q&A session?
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. My first question is on India HI. So I understand Q2 muted growth. My question is on the outlook. We are seeing very high dengue cases in many parts of the country. I see your hit advertisement, in fact, mentioned the dengue word also. Second in this is Dabur has entered the in-home HI. So if you could discuss, do you see a big impact of that longer term? And essentially, if you could discuss the margins, how are the margins in HI in India?
Hey Avnish, this is Samir here. So I think the overall HI performance so far has been steady for us. Of course, I mean we don't disclose specifically HI, but I'm very happy to share that for first half of the year, the overall HI growth has been around double digit mark. We continue to get the building blocks in place in terms of either driving penetration in the category as well as driving premiumization, taking this category beyond mosquitoes as well as taking this category out of home. I would say the season has been mixed for us. We did see, dengue breakouts in some of the cities where we had very strong growth. However, we also saw rain deficit in August as well as excessive rains in September, which did impact the growth. So let's see, how the overall performance in medium term shapes up. But so far, so good. We do feel that we should, structurally remain in that zone of high single digits to low double digits growth, something which we have called out as our on HI in India over a period of time.
And could you discuss the new competitor and margins?
Yeah,
some sense on the margin?
Yeah, I'll take the margins question first, Avnish. So I think the margins are largely intact. Thankfully, HI is one of those categories which does not have any major, commodity inflation, barring, say, metals, which does impact, aerosols and a bit of LPG and solvent. But the inflationary impact is, relatively lower as compared to rest of the portfolio. So the margins are, up there. And we have been also taking calibrated price increases in HI to mitigate some of the inflationary impact.
And the new player?
I think it's too early to call out. We have always, kind of mentioned in the past that in a very consolidated category like HI, every player will sort of, expand the overall market, right? It's more of wait and watch at this point in time. We are very, very dominant in terms of our play. We have a very strong brand equity. So we are not too overly worried at this point in time.
Sure, thanks. That's useful. Just one follow-up on HI. Jumbo Fast Card, now Pan-India full launch has already happened?
It's just getting nationally rolled out, Avnish. So this was more of a West Maharashtra rollout over the last 2-3 months. And this is just now getting rolled out, including media, kind of break nationally since last 2-3 weeks.
Sure. My last question is again on the India business. You have seen good growth in air freshener, personal wash, hair color on YOY basis. I understand that. But when I compare, say, 2 years back to pre-COVID, if you could give some sense, where are the volume numbers in air freshener, personal wash, and hair color?
I would give you directional input to appreciate the quality of growth, Abneesh. I think the overall growth in personal wash, YOY, as well as on a 2-year CAGR basis have been, robust. There is also pricing-led growth over there. So we need to also keep that at the back of our, math. Hair colors growth also have been, kind of good on a YOY basis as well as on a 2-year CAGR. Air freshener, on a 2-year CAGR is still, I would say, relatively on the lower end, which means that it's gradually recovering as we come out of COVID environment.
So air freshener, hair color are back to 2-year level. Is that what you're saying?
No, not air fresheners. I would say hair colors largely there.
Okay, that's all from my side. Thank you.
Thanks, Abneesh.
Thank you. The next question is from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi. Just wanted to understand on the inflationary scenario in soaps. Your standalone gross margins are down very significantly. So firstly, what is the extent of price increases that you have taken? And how much more do you think you require to offset or manage the cost inflation? And this is in the context of the fact that there is a cut in the ad spend and also employee costs due to our EVA calculation, that I understand. But this ad spend cut would not sustain for long, right? You would need to advertise. So if you were to sort of maintain this kind of EBITDA margin, how much more price increase do you think would be required?
Hey, Percy. So if we look at India's gross margins, there has been contraction of around more than 800 basis points. And if we double click into that, I think around 3/4 is led by palm, which has impacted soaps, and the rest is driven by basket of chemicals and metals, as well as crude linked, inputs. What we have done is in soaps, we have taken price increases. They have been calibrated. Also, what we have done now actually is taken price increases further rounds in soaps as well as non-soaps portfolio. The reason being that over the last couple of months, we have seen generally inflation moving up even sequentially. And hence, to combat that, we have taken price increases. They will be effective, my sense is somewhere, late December. So this high inflationary challenge, especially on overall operating margins, will remain for next, couple of months. But our senses come, kind of Q4, we will see, overall operating margins, kind of parity. To take your question on employee cost and ad spend, I would say employee cost is, driven by genuine efforts to kind of reduce down, overall employee cost. Part is also driven by the performance variable remuneration, which is in turn driven by, part EVA and part, sales, and EVA because of profitability is relatively on the lower side. Ad spend sequentially moved up, Percy. I think from around 5.5% in 1Q, we are at 7.5%. Though we will see, ad spends also moving up in rest of the year. And that's also one of the major reasons why we are taking some of these price increases. And honestly, I would say they are a little bolder ones at this point in time, which will be, seen effective in the market somewhere, sort of late December. Lastly, in category like soaps, I would say it's a basket of, taking calibrated price increases, consumer offers, trade offers, and ad spends, right? So we need to fine balance all these 4 types of investments together. You cannot go ahead with all the 4, investments at one go. So there will be some prioritization, but the thinking is very clear for non-soaps portfolio, especially where we are seeing good solid growth. We will continue to invest ahead of cost.
Right. Secondly, on household insecticides, I believe for this quarter, the 2-year CAGR would be somewhere around 6%. So that's a pretty lackluster growth considering that household insecticides is at least partially a COVID tailwind kind of a category. So any comments you have there?
So as what I shared earlier to Abneesh, right, this has been a mixed quarter for us in a way, because we did see, dengue breakout in cities where we saw very strong growth per se, but we also saw rain deficit and excessive rains, which, is not very good for mosquito breeding. We have called this out also in the past, Percy, that the best way to appreciate this category's performance is actually over a 3-4 quarter period, right? And if you look at H1, we are there in terms of close to double digits growth rates. A quarter can always be very deceptive, whether it's exceptionally high growth or exceptionally low growth, but the building blocks are very much in place in terms of driving a sustainable growth in this category even over a period of time.
Okay. And lastly, since Sudhir is there on the call, Sudhir, any thoughts that you would like to share in terms of diversifying the product portfolio in India so that the dependence on HI as a category is reduced, or it's too early for such questions for you?
It is a bit early for that specific question, Percy, but I think I can say this from the brief time that I have looked at the business is that all the categories and countries that GCPL is present in, they offer terrific opportunities for growth, including HI. So while HI is a business that, as Samir said, varies by quarter because of a variety of reasons, penetrations, for example, of the liquid vaporizer or of aerosols are low. So I would say that while there will always be opportunities outside, I think there is a lot of opportunity for us to grow in the businesses we're in today.
Okay, that's all from me. Thanks and all the best.
Thanks, sir.
Thank you. The next question is from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi. Thanks for taking my question. My question was again on the input cost side. So, I know we are in pretty unprecedented times of commodity inflation, but we have not seen this kind of a gross margin hit YOY in any other company or even in GCPL in the past. So is the reason, that there is a constraint in pricing because the market leader hasn't taken enough pricing, or is it just a timing issue that commodity ran up too fast and therefore the pace could not be kept? And where I'm coming from is that if we assume that palm oil prices don't correct from here, is there a challenge of managing margins for the rest of the year also?
Hey Arnab, this is Samir here. No, I think it's more of the latter to answer your point, because we have been pretty competitive and honestly little ahead of curve. I mean, as you are aware, we have this micro marketing strategy, so it's not one size fits all pricing approach which we take on a category like soap. And also when we look at relative pricing index, we are perhaps little higher than what historically we have been. The gap is huge, I mean, especially in category like soap, between increase in input cost and the end consumer price, and there is also a cap, right? I mean, at the end of the day, how much consumer can, take that inflation. So as I was sharing earlier with Percy, is we have taken next round of price increases in soap and also in non-soap category, which will help mitigating the inflationary pressures, which are largely in soaps at this point in time. But because of our strong market standing as well as brand equity in rest of the portfolio, we feel that it should, kind of sail through without any impact on the consumption and also cushion the overall operating margins in medium term.
Sure. So basically what you're saying is that you have been a little ahead of the curve, which means that the overall market pricing growth is still lagging a little bit. There is a bit of reluctance in taking the full pricing by most of the other players also.
The gap is too huge. I mean, to give you some data, Arnab, I mean, the overall palm inflation is around 50-55% on a YOY basis. Now, we cannot pass on as an industry, I mean, the entire increase, I mean, to the end consumers, right? Because the consumption may just, fall flat. So it has to be calibrated in nature. Yes, I mean, sometimes it could be little more, bolder, which is what we have, kind of gone ahead with on soaps. And then we're leveraging our rest of the portfolio to kind of drive, kind of pricing-led growth in the non-soap portfolio, which will, kind of mitigate some of the inflationary impact in soap portfolio.
Oh, understood. And my second question was on the demand scenario. So, second half last year, we had seen your hair care business recover, and even HI after a soft 2Q had actually recovered in 3Q, 4Q. So you actually have a relatively tougher comparator. Overall, how do you see the demand environment? We have heard mixed feedback from companies on potential rural slowdown and other things. So a general kind of sense of what kind of outlook you're looking at from a growth point of view.
I think as Nisa called out earlier, we remain cautiously optimistic in medium term. I mean, it's mixed, to be very honest with you, and it also differs from, month to month in terms of what's happening not just with channels, but more importantly with consumers also. So we remain, at least at this point in time, reasonably well placed to be close to the double-digit growth ambition which we had called out in India business. There will be some play between value and volume, right? UVG and UPG, at least in very short term. But from overall demand perspective, we feel, largely it's more of the same. There have been no major changes, especially at consumers end, which gives us a view to kind of change our own point of view in terms of high demand or low demand.
Okay, thanks, Samir. That's it from my side.
Thanks, sir.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, Samir. Just wanted to continue with what you said last. While you're clearly confident or looking to kind of at least do the double-digit growth ambition in India, would we find it difficult to meet the flattish kind of margin expectation given the sharp inflation and input costs? Would that be a fair understanding?
Yeah, so it's very difficult to give a guidance on margins, honestly, right? Because there are just too many, moving parts. There could be a scale play. There could be, generally how the demand is shaping up in either of the directions. But as I mentioned earlier, in very short term, maybe for next month or two, our sense is, there will be a bit of operating margins, contraction. But again, equally, we remain confident that, maybe from Jan or so, with all this price increases, getting into the market, we will see at least, margins maintenance. See, also we need to look at margins on a relatively longer period. So while in this quarter, the overall margins have contracted, if you look at first half, the margins contraction is only by around, 60 or 70, basis points. So till the time the overall double-digit growth momentum continues, we don't mind, in fact, investing little ahead of curve to kind of get sustainable sales growth, even if it comes at the cost of very short-term margins.
Got it. Fairly clear. And the second bit on Indonesia, in the earlier, when we had a call with Indonesia, what we had understand is there is a recovery that is kind of panning out. Could you kind of give us a sense on how is that coming through, especially because the understanding that we had is even the competitive intensity on the wipes is now getting managed. So any update on that, if you could please share?
Yeah. Hi, Avi, this is Sudhir here. Can you hear me?
Yes, Sudhir.
I'll take that question if Samir doesn't mind. I think Indonesia, there are a set of 2 or 3 issues there in Indonesia. First is that the macroeconomic situation does seem to be very, very tough in Indonesia in the short term. Many companies have posted weak results, GDP growth is contracting, etc. Having said that, again, this is a very early read of the situation. I do feel that there are some things that we could have also done better in Indonesia, and I hope we'll do them in the near future, and we will see a recovery in the medium term, both because of the economy and both because of some actions that we take.
Okay. And Sudhir, just last one for you. You obviously have settled in now. It would take some time to kind of, get to know the business well. When can we kind of hear a roadmap from you on how do you want to, look at growth rates from a medium-term point of view? Any timelines would you be willing to share? I think
perhaps in a few months' time, I'm still just getting to understand the big picture. I think in a few months' time, perhaps we can talk in more detail.
Thanks a lot, Sudhir. That's all from my side.
Thank you. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Vivek Maheshwari from Jefferies. Please go ahead.
Hi, good evening, everyone. Couple of questions. First, on the gross margins again in India business. So, do you think that second quarter marks the trough of, on margins, or is it going to be the third quarter in your view? Assuming that input stays where it is.
Hey Vivek, this is Samir here. So again, I think it's difficult to call out at this point in time in terms of what could be the quantum of margins contraction. There are too many moving parts, Vivek, right? There is going to be incremental pricing-led growth in Q3 compared to Q2. There is going to be also shift in category, kind of mix. We have a big season, especially on liquid deaths, which is relatively high, gross margins. But to say the least, there will be, kind of gross margin, kind of pressures, hopefully, kind of lower than what we have seen in Q2, especially on a YOY contraction. And with this, with some of these price increases, kind of getting into the market, we should see, I mean, a southward trend in terms of contraction of gross margins in coming months and quarters.
Right, that is given, I understand, but I'm saying if you just eliminate the category mix part and just look at soaps, can you just, give your views? Or basically the other way of asking this is, when we look at second quarter numbers, the consumption of input versus, let's say, exit gross margins, is there a big difference between the two?
So Vivek, to answer your question, my sense is the soaps gross margins will, kind of continue to move up from here on.
Okay, that's good to know. The other thing, Samir, on price hike, when you say that soaps you have affected the price hike the next round, is this are you following the market leader over here, or this or for that matter in the past I'm guessing you would have, but this one when you say that you have been bold, so does that mean that you have taken up prices ahead of what the market leader has done?
I don't know what the answer you got from the market leaders, but no, as I mentioned to you, I mean, we continue to take calibrated price increases. The approach which we have adopted, Vivek, over last many years is, what we call as capturing micro markets in terms of taking those calls in specific states, in specific bunch of districts, rather than taking a pan India, one size fits all pricing, approach, and that has worked very well for us. And we realize that in so many markets and districts, we compete with so many different players, right? And hence there is no question of one-on-one comparison for, a lot of our brands as well as SKUs. So it's kind of not straight to a specific player, but yes, I mean, we have been a little bit more bolder is what I can share in terms of our, kind of soaps pricing generally, I mean, over last, few weeks, because the commodity inflation has been relatively on the higher side.
Okay, got it. And one question for Sudhir. So Sudhir, can you just give your initial thoughts on how do you contrast, let's say, GCPL with HUL, both a few points which let's say are on the positive side, and a few points where you think GCPL can do better, the way in which you mentioned about Indonesia, for example.
Why don't you wait for Sudhir to give you his full strategy in a couple of months? I don't think this is a comparison between HUL and GCPL. Sorry, Sudhir, but you might want to do it.
No, I think the interesting thing, Vivek, is not, I think there's something which are common to the two companies. They're both, I think, great places to work. They've got a great value system. They've been around for a long time, very strong brands. I mean, I think there are some things for GCPL does really well, and there are some things for it probably to do better, but maybe I'll answer that question in a few months.
All right, looking forward to that, Sudhir, and all the best to all of you. Thanks.
Thanks, Vivek.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good evening. So this was regarding India, innovation pipeline. You mentioned, in your outlook as well that there are a lot more exciting, product innovations, etc. I just wanted to understand that, does the timing of some of these launches that you are planning from a medium-term perspective get pushed out, given the unprecedented inflation that you are seeing, or is one of the reasons that, you've taken these aggressive price increases to keep your launch timeline consistent?
Yeah, so we are not going to compromise in terms of our launches. I mean, timing also is a factor of readiness and, readiness even from an end consumer perspective. Honestly, in medium term, I mean, there are no big bang, sort of launches also, I mean, planned at this point in time. But strategically and directionally will continue, I mean, to drive innovation-led growth and not compromise in terms of, pausing on innovation for a long time because there is, short-term margin pressure.
And just a follow-up on that is, do you also believe that, this is, given that you're, cautiously optimistic on the demand environment, this may also be a time to even just keep focusing on what you've already done and, may not, look at something more big bang. Does the market kind of warrant, that kind of an outlook right now?
I think we already have some big bang innovations in place, and I think like what Sudhir said earlier, even say in HI, there's a whole penetration game, whether you look at electric, so even say something like Jumbo Fast Card is a sort of very big innovation for us in India. So, I think we will focus in terms of what we've already launched, at least over the next quarter to 2 quarters.
Got it. The second question was on the hygiene portfolio, both on personal and home. Now that these categories seem to have normalized a little bit more in terms of demand and consumer penetration, etc. Is there something more than others in terms of what you're willing to invest in? Regarding, say, for example, what you launched in the last 12-15 months. Are there 2-3 focus subsections that you're going to look at slightly closer or invest more behind on both the home hygiene and the personal hygiene side in terms of new launches?
No, I think it won't be Sudhir here. I shouldn't. It'll be giving away too much to say what our strategy in terms of investments are. I think that during COVID, both in India and Indonesia, we got a lot of new launches in the home and hygiene space, and many of them have done well. And since we've got this tailwind of the pandemic, we'll continue to build on the gains that we've got during the pandemic. I have a suspicion that many of these products may or may not do as well this year as they will do last year because of the pandemic. But I think the equity is strong, and these are long-term plays. Both Sanitar in Indonesia and Magic in India, both of them now extremely well, and these are long-term bets for the company, I would suspect.
Got it. That's it from me. Thank you.
Thanks, sir.
Thank you. The next question is from the line of Richard Liu from JM Financial. Please go ahead.
Hi, good evening, everyone. Just want to check if you can hear me clearly.
Yeah, Richard.
Yeah. So, my question is on Africa. If you can talk a little about, about that region, because that's definitely one of the bright spots here. Would you say that, that we've now level steady state that you wanted after all the actions taken by Dharnesh and team in recent months? And any perspectives on what more actions are in store and what should we look forward to from the region going forward?
Yeah, thanks, Richard, for your question. I think with Africa, with Dharnesh coming in and now with Sudhir also, we had put a strong turnaround plan to that business. And I think what we're seeing is that, it is playing through, and we'd actually put a 5-year plan in place. And I think both on top line growth and, sort of EBITDA margins moving sequentially, we've been quite happy with what's happening in that business. And as we voiced over before, there's quite a lot of back to basics there in terms of driving distribution and focus on core categories. And also in, in Nigeria, we talked about building out categories like HI.
Okay. All right. Thanks, Nisa. I wish you all the best.
Thanks, Richard.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Shirish Pardesi from Centrum Capital. Please go ahead.
Hi, good evening, Nisaba. Good evening, Sudhir and Sameer. Thanks for the opportunity. I have 2 questions. The first question is broadly on the rural part. I think there is incremental noise has happened over last 45 days, and companies have been saying that the Nielsen is one of the data point out that there will be a slowdown. But in your lens, how do you see this is a challenge? Because what I see that last 4 to 5 quarter COVID tailwind has given you a strong impetus and you would have grown to rural. So my question is in 2 parts. What is our rural contribution today? And how do you see this is as a challenge or as an opportunity, or you really see that rural slowdown is visible in the last 45 days?
Yeah, Shirish, I'll pass to Sudhir here. I'll pass on the question on rural contribution to Sameer. But the honest answer is when I looked at the data, I'm not able to, in real terms, see a rural slowdown. See, there are a lot of optics in data, both externally and internally because of COVID basis, right? Like, for example, during the COVID lockdown or the first COVID lockdown, urban cities were closed, but business in rural continued. So you have different comparators and so on. So when I look at this data shorn of these quarterly and annual movements, I don't see a specific rural slowdown, even though optically the rural numbers are lower. So, both in Nielsen and our own numbers, rural is now not growing as fast as urban. But I don't see this when I adjust for a 2-year period, or I don't see it very obviously in any case, Shirish. So I'm not able to read this data clearly, but but I'm going to pass on to Samir on what our rural contribution is for our business.
So directionally, Shirish, rural is going to be a big growth vector for us, right? Because a couple of our categories are under-penetrated in rural, especially hair colors as well as household insecticides. Contribution is shade below, 30% for us, which is lower than generally contribution to be in the overall FMCG space. So it's definitely going to be actually a big growth, kind of space for us in medium to long term.
No, I agree with Sudhir. And the specific question is that in your erstwhile organization, you were the guy who really pushed sachetization of Glaxo portfolio. And I think you have done a wonderful job there. And in that understanding, I wanted to have your opinion. But from the Godrej perspective, do you really see that the product profile which we have customized as per the rural requirement there is a penetration-led growth which we can expect in the next 4 quarters?
100%. Certainly in household insecticide, which is electrics, and in shampoo, in hair color, these 2 core categories, they're very, very under-penetrated. Soaps is well penetrated in rural. Perhaps air care is a bridge too far right now for rural. But these 2 large categories, I would say a bulk of the growth have already been coming actually when I look over the numbers of the last few years, and will continue to come from rural.
Sure. My second and last question again on Indonesia business. Since I've been tracking this business for a long time, I think last 5-6 quarters, this business has always been volatile, either in terms of top line or bottom line or something. So I just want to have a candid answer. Is there a real problem in this business in terms of marketing, in terms of sales, in terms of channel, in terms of mix, or in terms of category? What is the real problem in Indonesia business?
I think we voiced over this. Obviously, if you look at the macroeconomic, it is not supporting the business. But, if we look at under the hood of the business, what Sudhir also mentioned, I think there have been sort of missteps by us also, which we are very sort of conscious of and focused on correcting in over the next few quarters. But I think fundamentally the business is a strong one, which we have, said before. It's a strong relative market shares in categories that we're strong in, good sort of margins. And again, both from a penetration and distribution, lots of opportunities. I don't think we've been executing as well as we should have. Saniter has been a big success there. But definitely on the core, we need to be doing much better. So that would be
I agree, Sabha. But the last call which we did on the Indonesia business, I was pretty excited. But I think, again, we are, after seeing the quarter number, again, the worry is that whether this business will show some momentum in next 4 to 5 quarters. That's the worry.
Yeah, so I appreciate your worry, but, I think we are quite focused on that. We're not happy with the numbers. So, we are focused on turning the ship there. I think one thing that you'd probably acknowledge about GCPL is that, we're not going to sort of just put this on just macroeconomic and say that's the only reason. It's definitely there. I mean, if you see the other companies' performance there, but it is something that we're focused on, bringing back to good growth as soon as possible.
Wonderful. Thank you. All the best to you and the team, and belated Diwali greetings to the team.
Happy Diwali to you also.
Thank you.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. 2 questions from my side. First one was on the HI side. With the markets opening up, how do you see the salience of incense sticks as a format in this category shaping up now? And your own play, here, Jumbo Fast Card is something that you're rolling out across the country. How has been the response so far? And do you anticipate, or do you see a need to introduce more, HI formats in the economy end to tap into the whole rural play? And the second question was again on the new launches that you've done on ProClean and an Easy 2-in-1 for regular clothes. What is the update on distribution scale up for both these products? Thank you.
Latika, the salience of incense stick has remained sort of stable over the last year or so. So we don't see it growing it's not gaining that much salience. That being said, as we've said before, it has a big job to be done for the consumer. And, our real response to that has been this Goodnight Jumbo Fast Card, which is an excellent product. It is a bit early to comment on this Goodnight Jumbo Fast Card. I think, like Sameer said, media has just sort of started in October. The All India launch has really just happened in September and October. So I think we'll be able to voice over more on that over the next 6 months. I think the other sort of job to be done also is to drive electrics penetration, which is at about 25%. I think that's going to be a really big, strong focus of Sudhir and the team sort of going forward. So I don't think it's a one-pronged approach. In terms of new launches and innovation, I think while we have things in the pipeline, I think between Gold Flash and this, Goodnight Jumbo Fast Card, we already have quite a lot in the pipeline. And I think one of Sudhir's, which he'll probably talk more about in February also, is really focusing, less is more type of strategy, because there is these big penetration gains for us to have with what we already have in hand. I think your other question was on on ProClean and I think the Easy 2-in-1. I think that's doing decently well.
Sure. Thank you.
Thank you. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Anand Shah from Axis Capital. Please go ahead.
Yeah, hi. Just had a couple of questions. So, firstly, on the hygiene part, I mean, you had done a lot of launches over the last, 15, 18 months. Can you give some update on, what is the salience of these new launches to overall India revenues, and particularly which ones would you, continue to focus on or may continue to, or sort of discontinue, because of COVID has stabilized?
Hey, Anand. So I think the overall hero format, I would say, within the hygiene has been, hand wash, and within that actually powder to liquid hand wash, which has been, consistent, kind of growth vector for us. Some of the formats like mask and sanitizers have, sort of either normalized or, sort of moved away. So that's how the hygiene portfolio is shaping up at this point in time. I think we are the second largest, market players in terms of volumes when it comes to, hand wash, thanks to the powder to liquid, hand wash, format. So that's a great news for us. We need to drive, penetration as well as drive, kind of consumer awareness. And the way we are looking at this space is not just, hand wash, but it's actually soaps, right? So that's the, way we are looking at, kind of getting, share, within the overall hand wash, space.
And I think the other big thing that has worked well for us is Sanita in Indonesia, which is the disinfectant aerosol in the hygiene space. So both of them have worked very well. Sanita has been a blockbuster success in Indonesia, and so these are the two big, since you asked the questions, what we'll continue with, this is a big one.
Got it. Thanks. And just my last question is on hair colors. I mean, if I heard correctly, they are now back to sort of pre-COVID, right?
Largely there. Anand, in terms of, sales, what it used to be pre-COVID levels, the growth rates as well as 2-year CAGRs are very much, on track. And the creams and the shampoos, hair colors are, kind of firing on all cylinders.
Got it. Yeah, thanks a lot. Thank you.
Thanks.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you, everyone. Thanks for joining. Stay safe, stay healthy. Thank you.
Thanks.
Thank you. On behalf of Godrej Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.